Good morning, traders. It is Thursday, January the 9th. Taking a look at the charts, we got the SP 500. Let me just pull over our trend analysis, our short-term trend analysis here. More or less, the markets are up again today. It's amazing how they have swung in the past 24, 48 hours with the missile strike. Stocks sold off in a huge way, came all the way down through the 20-day moving average, continued to go all the way down and flush out some serious stops. And more or less, the market reversed yesterday with a strong close. NASDAQ hitting new highs. Now today we're hitting SP 500 again, new highs. And if we look at the 30-minute chart, you can see the price swing, how price rallied up, consolidated, had the second half of that move, more or less a Fibonacci measured move. You've got, I haven't measured it, but visually it looks like that should be pretty much 100% measured move, meaning we've got the low to the high in the morning and back down, carry us over. So we're not quite at the 100% measured move for this pattern, which is a rally, the pullback, continuation rally, but we have had a nice pop. We've got a consolidation right up at these highs here as it's trying to break through there. This is a bull flag. This could easily, well, the market is set to gap higher, and it is going to gap through this 100%. It's going to gap somewhere up here today. So we're going to see that 100% measured move just based on the past two trading sessions. And shorter term analysis, if we just look at this current bull flag and we throw a Fibonacci extension on here, we've got this rally to this high and down to this low, and that'll give us the upside move for the next, get out of here, for this next market move, which is, let me just get rid of this one. And it shows where the upside potential move is. So we've got this rally, we've got this bull flag. Today, the market is trading in pre-market at 32.71, 32.71. So we are somewhere right here, right at the 618, which is the first level that usually if we see that level and we get a minor pullback there, usually we see the 100% measured move reached as well. So there's still some pretty good upside. The market is going to gap higher today. If you look at the line on this chart, this red hashtag, this is an area where the market is overbought. So the market rallied yesterday, consolidated, held there. It's overbought. Today it's going to gap up here. I wouldn't be surprised if we see the market fade back down, fill that gap, and then potentially start to run higher going forward. So overall, the market is overbought. It's gapping higher at a Fibonacci target, which is going to act as a resistance zone. So expect some type of potential pullback. But overall, this pattern here is still very bullish, and we're looking at higher prices going forward. Taking a look over at bonds. Here is a chart of bonds. Bonds continue they're struggling and trying to break out here, but they do have on our short-term indicator here, we've gone from red bars to orange bars, meaning we are in the process of a potential trend change. If we zoom out a little bit on the bond chart and we draw some lines on here, you can see here we're fighting here with this resistance area on these trend lines here going to the downside. We are threatening to break out, but each time we gapped above it, we've sold down, and then obviously we had the big spike through it again, ended up closing back below that level. So it is starting to threaten and break these trend lines here. Eventually we should see this start to hold its ground, maybe build some type of bull flag, meaning it's rallied up and consolidated in here at a pennant formation or something, and we can start to see this rally. But overall, it's still struggling. It hasn't cleared that resistance trend line yet, and we haven't really broken two significant standout highs on the chart, meaning this is the first one. This here, really this high would be the more significant one, but more or less this is a standout high there, and this one here is a fairly significant standout high as well. Usually what we can count on are breaking two of those levels. Once you've broken two, first pullback or pause can be bought for the market to go higher. But overall, our early indicator here is showing signs that momentum is shifting very slowly into the bond market. Looking over at gold, gold down 0.4%. Let's just zoom out a little bit here. We talked about gold and bonds as having similar patterns, more or less. Bonds and gold both had a big rally. They've both had a similar multi-month consolidation. Gold seen as the safe haven with obviously war kind of things happening. We've seen gold really take off and lead the way, while bonds are still struggling to break the falling down trend line. Overall, huge move in gold, and it broke resistance, and now it's pulling back. And I wouldn't be surprised if we see the market consolidate and chop around in some big consolidation here as it tries to break through this high, and then eventually we see it break and continue to go further. But more or less it's gone. If you just look visually at this move, we got a move from here and it ran all the way up to here. Visually, just looking at those charts, I mean, we've gone very similar distance again, and the markets tend to move in similar patterns and similar pulses. So that's kind of the market's overdone, and I wouldn't be surprised if it consolidates. This could continue to rocket higher, depending on how the news unfolds, but overall, it's overbought. You can see our short-term indicator here. This is our overbought level. You can see how the market got pretty darn close to that gold. It sold down, then worked its way back up, tested that level for a little bit of a double top over the last 2 sessions. Gold moving down, and today it's trading lower down near the 5-day moving average here. But overall, I wouldn't be surprised. The oversold condition for gold is down here around this 1520, 1518 area. So there is potential for it to continue to work itself down and trade in this larger range going forward. Looking over at silver, down 0.9%. Kind of similar price action, a little bit different in terms of the bigger picture. It didn't come up like gold and break this previous high, but it had a very strong run, came into very significant resistance, some previous pivot highs, and again, I think it'll do the same thing. Same with gold miners. We could see a continued pullback and some type of correction through this area going forward. Looking at gold miners, GDXJ, looking at this pattern, you can see how we pushed up to new highs here. And then it had some pretty good volatility, and it's unwinding all this volume that's been accumulating in here. We're seeing an unwinding event, and it's coming down to the 20-day moving average. Overall, you can see gold miners, now we got lime green, meaning we are technically oversold on the miners. We're close to the 20-day moving average. They are set to gap a little bit lower today, but overall, the trend is up. They're having a pullback towards this 20-day moving average, and we could potentially see it start to find some support going forward and potentially trade sideways in this range before hopefully breaking to the upside and starting a bigger run. Looking over at energies, natural gas down 0.75%. It is still in a downtrend, still stuck under this 20-day moving average, and it has this little bear flag still forming. Again, ideally, I'd like to see it break down even further and have another low and potentially a really strong sell-off down to a support level around the 2 area, 205, and I think it could be an opportunity to stick a toe in the water for a knee-jerk reaction to the upside. I do feel as though it's in the late stages of a bottom, and I think it'll have some pretty good upside, but not looking to jump the gun and get in early until we reach a very significant support zone, which will be this previous pivot low over here. And more or less, it'll be a measured move from this drop to this bear flag. The second half of the move should bring us down here. So then we've got long-term support, oversold, and we got a Fibonacci downside target being reached as well, and we could get a very strong bounce or potentially a bottom out of that market condition. It would be similar to this type of move right here, where the market comes down, gets oversold, and then we could start to see it rally up, maybe consolidate for a while before it really starts the next big run. And that's what I'm hoping we're going to start to see somewhere over here. Looking at crude oil, it's flat on the session, but huge volatility yesterday. It is still in an uptrend. If you look at our trend analysis, green bars mean we are in an uptrend, but it has broken the 20-day moving average, which is this green line here. It is oversold, and we'll see if it gets a bounce today. But overall, this is a pretty strong reversal pattern. Although the trend is still up, this is a reversal bar, and we've seen this happen before where it reverses down. It might consolidate for a couple of days here and then continue down. Depending how it consolidates, we may look to potentially get an inverse ETF or play some the energy sector to benefit from a continuation move to the downside, which I think is got a good probability, but we got to be aware it is oversold. It's had a huge move to the downside. It rallied 5% on the news and then opened flat on the session yesterday and then sold off 5%. Pretty much like a 9-10% move yesterday. in crude from the highs to the lows. But overall, it's an oversold condition within an uptrend. So you got to be aware. That's happened here, here, here. We're back into that area. Just looking at these lows roughly, I mean we're pretty darn close to a support trend line area. It's been breached a couple times, but overall it is oversold in that support, and we'll see what happens over the next couple sessions. Maybe it starts to trade through this area with a bearish formation. We could take a stab at a downward move into this mid 50 area. Last but not least, let's take a quick look at the VIX here. You can see the VIX more or less still consolidating. We do have some elevated VIX readings over the last week and a half, 2 weeks here, and that's a sign that the market is still kind of working through some fear, and that means we potentially have more downside in the VIX, which means the market can, as fear dissipates, the stocks should continue to rise. And we talked about this yesterday. You kind of got this falling VIX. We got this falling VIX over here, and we could easily see this continue to grind itself down and trade along these lows here for some time. We've seen this happen many times before, where it can drag out along these lows for a long time while the stock market continues to rally. So overall, we're in this kind of falling VIX environment where it's still making lower peaks. It is a sign that eventually something big, a big pop, will come. We are getting squeezed down here, but we've had quite a bit of volatility in the last little while here. So the market is still somewhat cleansed, and I think we could see the VIX come back down to test this blue line, the 12 area, and the stock market could climb for a little while higher going forward. Anyways, that's it for now. Talk to you in a little bit. Bye-bye.